Good morning, friends. It's Monday, the 24th of March, 2025, and it's time for your news from the economic section of the Shafaq news website. According to a report from Bloomberg, Iraq is addressing an impending electricity deficit caused by U.S. sanctions on Iran by negotiating with several companies to establish two floating platforms in the sea for storing and converting gas by June. The report highlights that Washington decided earlier in March not to renew a presidential waiver allowing Iraq to purchase electricity from Iran, as part of efforts by the Trump administration to pressure Tehran into negotiating a new nuclear deal. This decision has left the Iraqi government requiring additional gas to meet increasing electricity demand. Iraqi oil minister Hayyan Abdul Ghani stated that these floating platforms will be near the Khor al-Zubair port in Basra. He noted that Iraq relies on its domestic gas production for about 60% of its energy needs, with imports covering the remaining 40%, and this percentage can rise to 50% during peak consumption periods. Additionally, the Iraqi government has put out a tender for a fixed gas reconversion platform at the Grand Fa port. Iraq aims to reduce the amount of gas it burns without utilizing it in order to lower its gas imports and plans to completely stop gas flaring by the end of 2028. The report indicates that negotiations between Iraq and oil companies operating in the Kurdistan region are advanced, with the Iraqi oil minister expressing hope that exports from the region will resume within a week. Iraq has repeatedly indicated progress toward reactivating the northern export pipeline, but producers have stated that clarity is needed regarding compensation issues, and the necessary contracts for resuming exports have not yet been signed. Iraq has committed to adhere to its overall OPEC+ quota after reactivating the northern crude export pipeline, although it has not yet clarified how it will achieve this. Turkish stocks increased by 3.1% on Monday, recovering some of the significant losses faced last week after the Turkish Capital Markets Board banned short selling on the stock market. The Istanbul Stock Exchange benchmark index ended last week down 16.6%, marking its largest weekly decline since the 2008 financial crisis. The banking sector index also rose by 3.23%, around 08:56 GMT, after suffering losses exceeding 26% last week. The Turkish lira was approximately 37.9550 to the dollar, relatively unchanged from the previous Friday's closing price of 37.950, following a 3.5% drop last week. International Turkish sovereign bonds regained some ground, with bonds maturing in 2045 rising by 0.7 cents to 83.7 cents on the dollar, after a drop of more than 3 cents last week. Market turbulence has been significant since the arrest of Ekrem İmamoğlu last Wednesday, with sharp declines in the lira, stocks, and bonds leading to extraordinary measures from the Turkish Capital Markets Board, including the short-selling ban and eased share repurchase restrictions. In Baghdad, both foreign and Iraqi gold prices rose in local markets on Monday, while prices in Erbil, the capital of the Kurdistan region, declined. In Baghdad's wholesale markets, the selling price of a 21-carat gold mithqal, a traditional Mesopotamian unit of weight, was 627,000 dinars, with a buying price of 623,000 dinars. In contrast, Iraqi gold was sold at 598,000 dinars, with purchases at 593,000 dinars. In jewelry shops, the selling price for Gulf 20-carat gold mithqal ranged between 625,000 to 635,000 dinars, while Iraqi gold mithqal prices varied between 595,000 and 605,000 dinars. In Erbil, gold prices decreased, with 24-carat gold selling for 716,000 dinars, 21-carat for 627,000 dinars, and 18-carat for 537,000 dinars. According to Numbeo, which specializes in living standards worldwide, Iraq is ranked 6th in the Arab world and 68th globally on the Local Purchasing Power Index for 2025. The report indicates that Iraq scored 54.5% in the index, which includes 139 countries. Globally, Qatar topped the rankings with a rating of 177.9%, followed by Luxembourg, 177.1%, Kuwait, 74%, Switzerland, 159%, and Oman, 152%. The U.S. ranked 6th with 146.7%, followed by Saudi Arabia, 146.1%. In the Arab region, Qatar led, followed by Kuwait, Oman, Saudi Arabia, Bahrain, Jordan, Libya, Morocco, and Lebanon. Among the lowest global rankings, Cuba, Syria, and Cameroon featured as the countries with the weakest local purchasing power. The exchange rate of the dollar against the Iraqi dinar decreased on Monday in markets in Baghdad and Erbil following the opening of the central stock exchange. The dollar was recorded at 147,200 dinars for $100, down from 147,300 dinars reported on Sunday. In Baghdad, official selling prices steadied at 148,250 dinars for $100, while buying prices were at 146,250 dinars. In Erbil, the dollar also decreased to 146,900 dinars for $100, with a buying price of 146,800 dinars. The U.S. dollar declined in early trading on Monday from its highest level in 3 weeks against major currencies amid market anticipation regarding upcoming tariff rounds planned by President Trump. As of 0:49 GMT, the dollar index was at 104.03 points after hitting 104.22 points on Friday, marking the highest level since March 7th. The index increased by 0.4% last week, achieving its first weekly gain this month. In contrast, the euro rose by 0.24% to $1.0836, recovering nearly 3-week low of $1.0795 recorded last Friday. The euro had surged to its highest level since October at 1.955 last week, buoyed by optimism around Germany's financial easing plans and increased military spending, although it has lost some momentum recently. The Japanese yen fell slightly to 149.77 yen against the dollar, supported by a rise in U.S. 10-year Treasury yields. The British pound increased by 0.15% to 129.34, while the Australian dollar climbed 0.29% to 62.91. Bitcoin rose 1% to $85,965 amidst ongoing volatility in the cryptocurrency market. The Turkish lira remained stable at approximately 38.050 to the dollar despite political tensions following the jail sentence given to Istanbul's Mayor Ekrem İmamoğlu for corruption allegations, which he denies. Gold prices fell on Monday as the dollar strengthened, with investors seeking new catalysts after last week's significant gold price surge. Spot gold declined by 0.2% to $3,060.43 per ounce, while U.S. gold futures stabilized at $3,020.80. Gold reached a record high of $3,057.20 last Thursday. The dollar index hovered near a 3-week high, making dollar-denominated gold more expensive for foreign buyers. Tim Waterer, a senior market analyst, noted that gold remains well-positioned for further gains if markets remain apprehensive concerning potential negative impacts of tariffs on growth, though this might be offset if a ceasefire agreement between Russia and Ukraine nears completion. President Trump announced a wave of reciprocal tariffs set to take effect on April 2nd, which could contribute to inflation and hinder economic growth. However, Trump indicated some flexibility regarding tariffs last Friday, easing some market concerns but also curbing gold's upward momentum. Gold bullion is perceived as a hedge against geopolitical disruptions, economic uncertainty, and inflation. Last week, the Federal Reserve held the benchmark interest rate steady at 4.25%, but projects 2 quarter-point rate cuts by the end of 2025. Silver increased by 0.1% to $33.66 per ounce, platinum rose 0.3% to $977.80, and palladium added 0.2% to $960.31. Oil prices were stable on Monday as investors assessed the prospects of ceasefire talks aimed at ending the war between Russia and Ukraine, which could lead to increased Russian oil imports into global markets. Brent crude futures fell by 8 cents to 72.8 per barrel, while West Texas Intermediate crude declined by 5 cents to $68.23. Oil prices gained on Friday, marking a second consecutive weekly increase amid new U.S. sanctions on Iran and recent production plans from OPEC+, raising expectations of tighter supplies. A U.S. delegation aims to advance a ceasefire in the Black Sea and broader cessation of violence in Ukraine, holding talks with Russian officials on Monday after discussions with Ukrainian diplomats on Sunday. OPEC+ recently released a new schedule for 7 member countries to increase oil production cuts to compensate for overproduction beyond agreed levels, which will exceed monthly production increases planned for next month. Market participants are also closely monitoring new U.S. sanctions related to Iran announced last week, which are expected to reduce Iranian oil shipments to China in the near term, raising shipping costs. However, traders anticipate buyers will find alternative solutions to maintain some level of inflow. And that ends all the economic news from the Shafaq News website. We hope this brings value to your day. If so, please like and subscribe, and ring the bell to be notified when our reports are uploaded. Thank you for joining us, and have a great Monday.